Welcome back. Okay, there has been a bit of a meltdown with people probably taking profit at higher levels. We started the morning on a high, so there's a little bit of profit taking, but let's see how the day progresses. Asia is giving us positive cues. We will take that with both hands. But now we shift focus to the metals space, the sector which continues to be in focus because of global demand deteriorating, especially the outlook in China, worries of a slowdown in that country. Domestic steel prices have also weakened on the back of lower international prices and trade war worries. So to discuss the outlook for 2019 for the steel sector, we have with us someone who's looked at this sector for probably, 3 decades, and made a lot of money for his company. Seshagiri Rao, Joint MD and Group CFO of JSW Steel. Good morning, Mr. Rao. Thank you very much for joining us. First, greetings of the season. A great 2019 to all of you at JSW. And then your steel outlook for 2019. At the moment, it looks like the two biggest economies are slowing somewhat compared to their pace in 2018.
Good morning and Happy New Year to all of you. As you have rightly said, there is some slowdown which is being witnessed globally. But what is important here is, in spite of global slowdown, the steel demand in the year 2018 is expected to be 3.9%. So which is quite high. At the same time, in China, so we have been talking about slowdown, the GDP within China is expected to be around 6 to 6.2% year as a whole, but there is definitely a slowdown relative to what it was. But the steel demand within China in 2018 was 8%, expected to be 8% plus. So this is the scenario in which we are talking, but only issue which is today is that November, December, generally globally because of winter production cuts on several industries, there is general temporary slowdown which we see, which will pick up in our view after the Chinese New Year. But there is definitely a slowdown in China, in auto sector, in housing sector. In spite of all that, FY19 in the I mean in the calendar year 2019, the steel global demand is expected to grow by 1.4%, even though it is lower than the last year. So there is an incremental demand for the year 2019. If that is the scenario, if you look at India in this year, in this financial year, we are growing in consumption factor by 8.4%. So there is a very, very strong growth in India also as regards to demand. So, but we expect this demand to accelerate, but it did not happen so far. So it may go up further once these liquidity conditions improve.
So, okay, what about this auto slowdown we saw in India? How seriously should we take it? November, 2 months on the trot, we saw auto sales dipping rather sharply. I guess that they are consumers of hot rolled coils. Would you worry about that? Is not that indicating consumption slowdown?
There is a slowdown, which we are not denying the fact that there is a slowdown from auto sector, but at the same time, overall demand for steel in India is 8%. So that is quite robust from that point of view. Auto sector, when we talk to our customers, yes, there is a problem as regards to the liquidity and also the sales from the wholesale market. But the understanding from our customers is that the retail side, the sales were not as bad as the wholesale. Okay. So if you look at January, February, March, it is expected to pick up. That is what the feedback to us. So we feel that in the quarter January to March, which is generally very, very good for Indian industry, we expect some revival relative to what we have seen in the month of December.
Okay, so that would be good news. Good morning and season's greetings to you, sir. But let's just try and put the current sluggish patch in context. So from the peak of 2018, what is the kind of price cut that you have taken so far? If you could just share the percentage drop. And also right now, is there absolute parity between prevailing domestic steel prices and the landed cost of imports?
Global steel prices went up over $600 per ton. Indian steel domestic prices were at a discount. So that is why when the steel prices globally now fell by over 15%, Indian steel prices also adjusted. There are two things which have happened during this period. One is rupee depreciation, which has happened over 10%. In addition to that, I'm able to hear you.
Yeah, please go ahead, sir.
Hello?
Go ahead, sir. We can hear you.
So there are two things which has happened. Number one is the rupee depreciation during this period of over 10%. Rupee depreciation is over 10%. In addition to that, there was a discount when the steel prices.
Mr. Rao, if you don't have any problem, you can go ahead.
There is some disturbance.
Okay.
There is some disturbance coming in.
All right.
Okay,
sorry.
We'll sort that disturbance. Okay, Mr. Rao, sorry, we'll sort that disturbance. In between, I just want to point out the market slipped and mid-cap IT is having a bit of a rough patch right now. Mindtree in particular, I think, just pull out the intraday chart on Mindtree. That stock is collapsing right now. Intraday, of course, there's some bit of money which is being taken off IT, but that stock is having a bit of a rough patch. Let's see how that one goes.
Yeah, advanced declines have turned. It was, 1.4 stocks in the green, or actually at 1.2 stocks in the green, one in the red, and now it's turned the other way around. So mid caps are in a bit of a jam. But I think we have Mr. Rao back with us. Mr. Rao, I'm really sorry for this disturbance. You were telling us about the global, the Chinese steel demand.
Yeah, the domestic prices which I was trying to explain as regards to the global steel prices in the last few months corrected by 15%. In the domestic market also prices got corrected. Now they are at par with the landed cost of imports. But when the steel prices were at its peak of $600 plus, the Indian steel prices were at a discount. So taking into account the rupee depreciation of over 10%, and the correction which has happened in the local market, I think today the prices are at the landed cost of imports in the domestic market. Now the buyers are also psychologically waiting for some price correction which has already happened. Therefore, we expect the demand to come back and the liquidity to improve in the market, which will stimulate the demand from particularly auto and housing sectors. So that should bring us some steam in the quarter January to March.
Okay. So this year, the Macquarie note said that there will be another correction in steel prices in Jan 2019. How do you see the coming quarter in terms of steel prices, Jan to March?
No, today the Indian steel prices have been following the global trends. If I see the global prices for the last few days, they are quite stable.
Okay.
The iron ore prices are at a rate of $70, $72. So cost of production is for Chinese steel companies is $450, $460 per ton. And many of the Chinese steel companies today are not able to break even or operating at losses. Therefore, further downside to steel prices from this level is very limited. So the domestic prices are at par with the landed cost of imports. Therefore, I don't expect any further cuts in the steel prices.
Okay, that's an important point, sir. We take that on board. So now that your cost of production hasn't really gone up, we keep hearing about these iron ore cuts that NMDC has been taking so frequently. So the EBITDA per ton, which was around 12,100 odd at the end of the second quarter, is that a level that can be maintained because you're expecting demand to pick up and I'm guessing you're not expecting an increase in iron ore prices?
No, the margins will definitely under pressure because the steel prices got corrected. By the time raw material price adjustments happen, it will take some time because we generally maintain 2 months raw materials and when the raw material get corrected, by the time new raw material comes into consumption, it will take some time. So iron ore prices, as you heard, NMDC cut by 300 to 350 rupees per ton. That impact will come when this new iron ore being bought comes into consumption in the month of February and March.
So now, sir, how much
lag
pressure?
Effect could be there as regards to margins.
So from 12,000...
That we will not be able to give guidance on that, but...
directionally from 12,100, you expect EBITDA per ton to move lower?
Yes.
Okay. If you can tell us what is the current situation in terms of whether any capex will be required at all. What is the extent to which, say, SR is supplying to the market or Bhushan is supplying? All these are companies which are kind of in the limbo. Is there a scope for capex, or will there be some flooding if these two plants get resolved? Then is there a danger of oversupply?
No, production is growing in India only at a rate of 4.5%, while demand is growing at a rate of 8.4%. So therefore, there is a gap in production and demand. Even though exports have fallen in this financial year by 38%, imports more or less at the same level as that of last year. Still, we are okay in the domestic market because the production is not growing at the same pace as that of the demand. So if you look at overall installed capacities within India and the capacity utilization and the demand growth in India, I don't expect any flooding of steel into Indian markets, at least from domestic producers. At the same time, when Europe is reintroducing safeguard duty now for next 3 years, they just announced that they will be extending safeguard duty for 3 more years, which is expiring in the month of February. And also Canada has again introduced duties, and America is almost closed for almost all the players. If that is the scenario, the trade is getting affected globally. So India should be cautious with regard to the growth in imports, because we have not seen any big reduction in imports in spite of several measures which Government of India has taken. At the same time, we are not able to export. But the worry is more of trade, more of India imports into India, not of domestic demand or domestic production.
So you're calling for a safeguard duty, or at least a higher tariff barrier?
There is definitely a need to look at increasing the base price, because the base price which has been fixed when the international prices were in the range of $300, at that time they have fixed at 445 or 489. That is the range in which the base price has been fixed. So below which the imports cannot come into India. Because during this period, the global prices were always higher than this price. Therefore, there was no threat of imports into India.
Okay.
Now the prices are getting corrected globally. There is a need to look at as regards to this threshold price at which the imports can come into India.
Okay, so maybe in the need for slightly higher barriers is
we are running out of time, sir, so we want a few more details.
Yes.
What is the update on Bhushan Power?
Bhushan Power.
Bhushan Power, the hearings are completed in NCLAT and the judgment is reserved. So we are waiting for judgment from NCLAT, that is one. Number two, there is another litigation which is pending in the Supreme Court, that hearings are still going on. So it may take some time by the time the outcome from Supreme Court and NCLAT comes in. After that only the successful bidder will be announced by the RP and also the COC. Then the resolution plan of the successful bidder will go to NCLT. So we are also closely watching the developments.
Is it this quarter you think we should get a result by 31st March?
Yeah, I think so. But if that depends upon how fast the judgments will come from both Supreme Court and also NCLAT.
Okay.
Can I squeeze a word on debt as well?
I just wanted to ask on the balance sheet issue, because earlier in an interview to our colleague Nigel, it was maintained that debt reduction is something that's very much on the cards. You also have a resolution to raise 5,000 crores additional. So any fresh fundraising exercise? And apart from Bhushan Power, let me be audacious enough to ask you this: any thought process right now within the board on fresh expansion, actual brownfield or greenfield expansion?
No, I am happy to say that we are expanding our capacity by 7 million ton, which is 40% from 18 to 25 million ton. So the capex program which we announced in the year 2017, it is on track. So we will be able to complete this project by 31st March 2020. So we are growing by volume by 40% to meet the growing demand in India from 2021 onwards. Because the domestic capacities, very few players are investing to create capacity. That is one positive. So we have been raising funding both in domestic sources and global sources to fund this capex program. That is what we are doing. Equity side, unless a very big acquisition happens, we have no plans to raise any equity.
Okay. All right, sir. It was a pleasure speaking with you. Thank you very much for laying out the map for 2019, both in terms of demand and price. Let's hope it's a great year for steel industry and for yourself as well. Once again, a very happy 2019 to you.